We're moving now to the U.S., where stock index futures pointed to a strong positive open as sentiment was boosted by news that the U.S. Senate narrowly passed a major tax bill over the weekend. In the early hours of Saturday morning, Senate Republicans managed to narrowly pass a bill to revamp the country's tax system. The final vote came out as 51-49 in favor after Republicans had to rework the bill late on Thursday. The GOP, however, still needs to overcome future obstacles in order for the Senate and the House to craft a joint bill which will then be presented to the President Donald Trump. Republicans hope a deal will be achieved by Christmas. Shifting to Monday, investors will be poring over news that U.S. drugstore operator CVS Health is to buy Aetna, a U.S. health insurer, for $69 billion. The agreement is seen as one of 2017's biggest deals so far in the merger and acquisition space. Aetna Retail and Corporate Software are expected to publish earnings on Monday. Meanwhile, on the data front, factory orders are set to be published at 10 a.m. Eastern Time. The futures numbers there looking all green. The Dow Jones crossing the 2,000 mark there, up 0.87%, S&P 500 at 0.59%, and the Nasdaq 0.43% up. In Asia, markets traded mixed today, while U.S. futures rose as investors digested news that the U.S. Senate narrowly passed an important tax bill in the early hours of Saturday. In Australia, the ASX 200 closed fractionally lower at 5,985.6 as the heavily weighted financial sub-index fell 0.62%. Japan's Nikkei 225 declined by 111.87 points, while the Topix index fell 9.66 points. Across the Korean Strait, the Kospi stood out from its peers, closing up 26.26 points. Chinese mainland markets seesawed between gains and losses throughout the session. In the afternoon, the Shanghai Composite closed down 7.24 points, while the Shenzhen Composite fell 13.89 points. In Hong Kong, the Hang Seng Index reversed early losses of near 0.3% to climb 0.6%. And away from the market, back here in Africa in all the market news, Steinhoff Africa Retail has reported a 25% rise in full-year operating profit, thanks mainly to cost cuts and a strong showing at discount clothing chains. Steinhoff Africa Retail, popularly known as Star, spun off from one of the world's biggest furniture retailers earlier this year, said operating profit came in at 6.1 billion rand in the year ended September, compared with 5.8 billion rand a year earlier. The top-line growth of 13% was slower than the operating profit jump, indicating deep cost cuts, including closure of underperforming stores. Star's strategic focus on lowering the cost of doing business and accessing new products and services through existing infrastructure drove group operating profit growth. Steinhoff, which owns Pontland in Britain, Mattress Firm in the United States, and Coverama in France, spun off its African chains to get a higher rating for its developed market businesses and to give investors keen on exposure to Africa a chance to invest in Star directly. When we come back after the break, experts proffer solution to Nigeria's housing gap. Details in a moment.